And so we're going to talk about whether or not there's a stock market crash coming. And just like anyone else, I don't know. I have my opinions, and we're going to talk a little bit about those and some of the reasons, 3 reasons why I think we are probably going to be seeing, uh, yeah, a market crash soon, considerably bigger than what we saw like in February. And I hope that I'm wrong. I really do hope that I'm wrong. I'm not trying to be a doom and gloomer. I'm not trying to be any of those things, but there's some writing on the wall, and I think it's naive to pretend like it's not there. And yeah, and so I just don't want to do that. And that's kind of where we are with everything. So I want to talk first about the 3 different things that just kind of all clicked, where it's like, all right, I'm going to start preparing for this because I think the likelihood of this happening is getting higher and higher. And so we're going to talk about that. And then we're also going to talk about 5 things that I'm doing to actually prepare for it. And yeah, so that's what we're going to follow up with after that. So first thing on this list is New York Times article I read, came out just the other day, a few days ago. And titled Worst Economy in a Decade, What's Next? Worst in Our Lifetime. And it goes on to talk about how, and I'm not an economist by any stretch of the imagination, but, you can kind of see what's going on here. But long story short, the gross domestic product, and this is in the first quarter of this year, dropped by 4.8%. And there's a couple different things here. So what that means for us is that this is the first decline in GDP in the U.S. since 2014, and the worst quarterly contraction since 2008 when the country was in a deep recession. And according to this writer in the article, and then he interviewed this chief economist for, his credit insurance company, but basically he said there's the worst is yet to come, because in the first quarter, a lot of the actual problems that have happened from this whole epidemic thing or pandemic thing haven't, because the first quarter ended on March 31st, and then April 1st is when the second quarter starts. And all the bad stuff really started kicking into gear in April. And so what we have going on is most likely the second quarter of this year is going to be way, way worse than this first quarter in terms of GDP. This guy goes on to say that this is going to be the worst in our lifetime. He said they're going to be the worst. They're going to be the worst in the post-World War II era. So, and even besides that, there's a couple other things they talk about here. Consumer spending has fell by 7.6%. And again, this is the first quarter. It's going to be way, way worse. And then on top of that, just talking about so many other things, like the car, what do you say, 30%, the car, whatever, auto sales were down, just all these different things. So anyway, so that's not super solid. That in and of itself doesn't make me all right, that's a problem. It's just the GDP. But this article, pulling that in with it, is really, really interesting to me. So this is an article on Business Insider, and I've been a student of Warren Buffett for a long, long time. And what he said, so Warren Buffett has this ratio that he uses, and he says that it is, how do you word it? Let me read it where he worded it basically. Probably the single best measure of where valuations for the market as a whole. He said this ratio is probably the one thing, if you're going to look at anything, to see whether the market is puffed up and ready to collapse. This is the one thing you should look at, okay? And so he said that it's a very strong warning signal when the indicator peaked. And he said this right before the dot-com burst in the late 90s, and that whole thing that we had happened then. And so if we look at this right here, it says, so this metric, and I'll tell you what this metric is. Let me find it here. So it's the so-called Buffett Indicator. He's they've named it after him because he talks about it all the time. It says takes the combined market capitalizations of a country's publicly traded stocks and then divides it by the GDP. So like we were just talking about in this other article, the GDP, which dropped by 4.8% in quarter one, which is likely to go way beyond in quarter two. All right, so that ratio, he says, in just before the dot-com bubble burst in 2000, it surged to 118% for that ratio. And so that was the big warning sign that something was going to come. In 2008, right before the financial crisis, the big recession we had at that point, it went over 100%. And as of quarter one of this year, with that GDP being dropping 4.8%, if you can believe it, it is at 180%. So in 2000, or right before the dot-com bubble burst in 2000, it was at 118, and now it's at 180. So, yeah, it's just way, way higher than it should ever be. And it's just a very big warning sign of things to come. Here's a little chart just to show you something, if I can get something. All right, so this is dot-com burst. Went all the way up to here, dot-com bubble burst. This is the the recession of 2008. And then this is where we are right now. And then after quarter two, when all this stuff comes out at the end of June, when we see quarter two results, like, I think this thing's going to be way up here if it hasn't crashed already. All right, so these are a few of my kind of things that, as I read these two articles and started seeing how these pieces are coming together, and then you think about the reality of what this looks like. In our town, we're starting to kind of open the doors up a little bit, and people are starting to go out. Like, they've opened up restaurants, but there's still social distancing in restaurants. People are still wearing masks, whatever, all the stuff. But point is, the transition out of this thing, this is not, and I think we all know this. This is not a flip a switch and now we're all done, back to normal. This is a long drawn out thing that I think is going to continue to, it's just going to take a while. I have a lot of friends who, being in Nashville, who are musicians, touring musicians, and they're like, I can't imagine we're going to play a show this year. Like, how is a concert going to happen with social distancing? Like, what does that look like? I think we're all trying to figure out, optimistically, what church is going to look like, hopefully soon. But a concert, like, when is that going to happen again? And anyway, point is that this is not going to be something we're just going to fly back out of. And as a result, like, all of these things, all of these problems are just going to spread and just take a while to come back. And then on top of that, we've added I think $2 or $3 trillion to our national debt. And so what does that mean? And there's so many brilliant economists who can talk for hours about this, and that's fine. But if you just apply just a little bit of common sense to this, I have people emailing me all the time who have massive overspending problems and who are adding thousands of dollars a month to their credit cards, and who are just way upside down. And it's like, all right, how do you get out of this? Like, where do you think this is going to end? Like, just imagine yourself, don't think just about the moment, but look down the road 6 months or 2 years. Like, where do you think this is going if you continue in this pattern with this habit? Like, anyone can see this is not going to end well. There's going to be a crisis here, that something bad is going to happen. And it's like, that's where we are as a country with our national debt. And it was huge before, and it's just gotten so much bigger, and it's just going to continue to get bigger. This video the other day talking about this $2,000 a month stimulus package that has been proposed, $2,000 a month per person over the age of 16 for 6 months, with the option to extend for 12 months. So literally, every American over the age of 16 will get like $24,000 given to them by the government. And it probably won't happen in that form. But the point is that our government is just going to keep trying to do whatever they can do to solve this problem. And and I'm not saying that we shouldn't try to do what we're going to try to fix it. But the problem is that it's not. Yeah, it's a big problem. And I don't know the answer. I don't have the solution. But all I'm saying is it's becoming easier and easier to see this and realize, all right, something's going to happen. Something has to give. And anyway, so all that, for me personally, I have concluded I'm going to start doing a little preparing for what could be a bad crash. Something that, who knows, maybe as bad as the Great Depression, and what would that look like? And just asking that question, not because I want to sit and be negative and focus on the negativity, but I also don't want to be naive. And it's like, I have grandparents who lived through that. And what did they learn that we know nothing about, or my generation knows nothing about, that would be good for me to be thinking about at this point? And I would rather be thinking about it now than thinking about it, whatever, a week after it happens, and try to think, how can I prepare for that? So with all that said, let's talk about 5 different things that I'm doing to kind of prepare a little bit. And so one of the things I've done is that I've sold off a lot of our stocks. And the reason being is because I'm convinced more and more that, selling off your stocks all the time just because you think something might happen and trying to time the market is just generally a bad idea. Most people will suggest that, and I agree. It's not a great idea to try to time the market. But on the other hand, I'm becoming more and more convinced that the odds of something bad happening sooner rather than later are pretty high, and I'm willing to take the risk of missing out on the gains as we come back out of this thing to be better positioned to reinvest or survive, if need be, when that situation happens. So that's why we've done that. Now, we've held on to a few different stocks that kind of made sense, one of which was Amazon. I mean, Amazon, I think, is going to come out of this looking pretty good. It seems like they have, everybody's complaining about how long it's taking to get stuff from them. But the reality is that they have met the demand really, really well. And a lot of people would be in really big trouble if it weren't for Amazon. Not to mention that they just hired 175,000 new people. So they're, supplying work to such a large percentage of our country as well. Anyway, so all that to say, they're one company that I'm hanging on to. So they, and Bezos did, somebody was just asking about their earnings, and Bezos did just come out to the shareholders, or Bezos, I think is how you actually say it, came out to the shareholders and said, we're basically going to, I think, reinvest every ounce, every dollar of profit that we got, or something like that. I forgot what he said exactly, but so shareholders might not be happy and the stock price might come down for a little bit, but I think long term, which is exactly how Bezos thinks, he went like 15 or 20 years without making a profit because it just continually reinvested. And so he thinks very long term. And I think long term, it still makes a lot of sense. But anyway, so that's one thing that I've done. Another thing I'm doing is I'm building up savings. If I had debt that I was paying off, that would be something that I would be thinking a good bit about, but I would be even more concerned about having a good, solid emergency fund built up. And so what we're doing is, with some of this money that's coming, the stimulus check and things like that, we are going to use some of it, but a lot of it's definitely going to savings just to continue to build up that buffer. I just want to be as well positioned as we can be for something, just not great to happen. Another thing that I have been doing, or I'm not stopping doing, is buying a little bit of cryptocurrency, which, might sound weird, but I think it's just interesting. It's a little bit of a gamble, but I think it's a little bit of a hedge. This is what my thinking is. That's a little bit of a hedge against what's going on. And if we have a really bad crash where whole currencies are just, clobbered, and with the United States dollar just continuing to give out all this money, like the power of the dollar is just not going to be nearly as strong. And with cryptocurrency just being a independent currency that's not attached to any one country or anything like that, I don't know. It'll be interesting to see. Like, it fared fairly well through this thing. It definitely went down with the market, but some of what I was reading was that was actually because a lot of institutional investors, like mutual fund managers and things like that, were selling off all their shares, or not shares, but all their positions in their cryptocurrency as soon as all that happened. And anyway, so I have no idea what's going to happen there, but that is one thing that we're just continuing to do a little bit. Next on the list, another thing we're doing is stocking up on food, and not in a hoarder way, or like filling our entire, closets in our bedroom with canned goods type of thing, but just buying food that's on sale, like shelf-stable food that's on sale, is just, one of the best investments that you can make. You know what I mean? It's something that you're going to buy anyway. And if you can get it for 25, 50% off when you buy a bunch of it on sale, like, why not? And the reality is that buying when you're not in a time of crisis and just continuing to buy a little bit more than you need to stock up your shelves, like that's completely fine, but if as soon as the crisis hits, you run to the store and clean out all the toilet paper, then, you're a bad guy. Everybody hates you. So I think the smart thing to do is in a time of peace, when there's not a problem, like right now, just continue to buy a little bit extra than what you need each time, or if something's on sale, like really stock up. We have a deep freezer, so, we filled that up with a lot of meat and things that, can last for a long time, and we'll try to get it on sale. And it's just, in general, a good investment. And the reality is we learned a lot from this whole thing that we've gone through the last couple months, just seeing a little bit of a market. I wouldn't call it a crash, but just like a hiccup, a little bit of a market contraction and problem. And just learning everything that we've learned from this, we got to see how society responded. We got to toilet paper, apparently, is the answer. So, buy your toilet paper now that it's back on the shelves. But seeing that and seeing how people respond and what are the in-demand things and what, it's just been really enlightening. And so it's a good educational thing for us to kind of prepare for what may be to come in the future. So those are all the practical things. And I think the most important thing, which I really, I think this is the most important thing and the thing that we should be talking about and focusing on the most, because I feel bad that I don't like being a doom and gloom type person. I don't like talking about the negative. I'm a very optimistic person. But anyway, the point is we need to get in the Word more. We need to be in the Bible. This is the thing that's going to strengthen us. And being strong for situations like this, being strong in the Word, being strong in Christ is the thing that we need to be able to handle these situations, regardless of whether this happens or not, whatever the thing is, like regardless of whether it's our own personal, crises because we lost our job or a big, broad economic one that's affecting everyone. The best thing that we can be doing is being strong in the Lord. And so the more that we get in the Word, the stronger that we're going to be and the better we're going to be able to handle this. I want to be like Jesus when he was asleep in the boat in the middle of a hurricane and all the, apostles are freaking out, say, we're going to die. And Jesus is down there asleep, and what would it look like to have that much confidence and that much trust in the Lord, regardless of what's going on, that we can be at rest and we can be taking a nap in the whole thing. You know what I mean? And so that's, for me personally, that's where I want to be. And so that's why I'm really doubling up my word intake and really trying to, most importantly, get strong in the word. So we mentioned some of the practical things, but to be honest, like all that stuff, if I'm not solid in the Lord, it just doesn't matter. All that stuff just does not matter. And so I would so much rather have none of the practical bases covered, but be in a really solid position spiritually to kind of be able to weather those storms. So